Um, my name is Brandon Dresner. I work with Supreme Lending. I've been in the business for about 12 years. Hopefully I can answer a lot of your questions you have. I've been in your spot before. I was a first-time home buyer. Even being in the business, I think as the state representative said, it's a crazy process, and it's only gotten harder. So I want to open up the floor with asking how many people are here are ready to buy today? How come there's only a few hands? Well, hopefully by the end of this I can help you guys, take the right steps, because you've probably heard this before, but as lenders, we normally, we financially undress you guys. We tell you how bad or how good you've been, and that's not always easy, especially with credit issues, and credit is so important today. If not only for buying a house, but buying a car and doing so many things. So who here has been pre-approved to buy a house? We got one person. Why? Anyone? Credit? Any other reasons? Money? Okay. Well, I think by the end of the session, you guys are going to be, I think you'll have better tools to make those decisions. I do want to talk about, the difference between a pre-qualification and a pre-approval. I said pre-qualify. Who's been pre-qualified? Essentially, a pre-qualification is where we take your information, you give it to us in good faith. You essentially ask you, how long have you worked somewhere, your credit, your date of birth, your social, the fun things that you give loan officers. But essentially what the difference between a pre-qualification is, I don't actually get any sort of documentation from you. And that's probably something that I'd like to stress, is when you do get pre-qualified, if your lender's not asking you for certain documentations, that hopefully during the process they can, because you need to really, in order to move forward with a house, you really need to be pre-approved. And pre-approved meaning I know how long you've worked somewhere. I've looked at your tax returns. I've looked at your income. I've looked at everything that we use to qualify you for a loan. So if we can take anything away from today, make sure that you do get pre-approved. Now, during that pre-approval process, and you guys can look at the brochure that we gave you, I want to touch on some documentation that's needed, because as a first-time home buyer, you may not know, what do we need. So everybody gets a W-2 at the end of the year. Okay, that W-2 is basically a summary of your yearly income. Okay, all pay stubs. If you get paid monthly, if you get paid weekly, bi-weekly, we'll need 2 years of residential history. 2 months bank statement, which is always fun, right? Trying to accumulate enough money for that down payment. And really, those are the things that we would need to move forward. Anybody have any questions in regards to what documentation? I mean, there's other things. I heard somebody come to the booth today and ask me about disability, Social Security income. You can use alimony, child support. Does anybody have any questions in regards to your income or what you need? She asked what documentation is needed for self-employment, which is a great question. Self-employment, normally we're going to look at 2 years worth of tax returns. And 2 years meaning you need to be in business for yourself for 2 years. There are programs out there that only require 1 year of tax returns. So those tax returns, talk to your lender and find out if they do have those programs. But in most cases, 2 years, but you may need, you may only need 1 year. Yes, ma'am. You don't file a tax return because your income is not at that level, or you don't file a tax return because? Okay. Okay, well, in most cases you don't file a tax return because you're not employed. It's because you're more than likely under the level in which you're required to file, correct? Then we're not gonna need tax returns. We're gonna look at your income that you received today. So if If they don't require you to file tax returns, then that's okay. You know, we'll use your, hopefully, Social Security or disability or whatever income you may have. It's a good question. Yes, ma'am. Well, I'm not going to say it's hard, but you'll want to make sure your lender goes through the right steps. Okay, so before they let you go out and look at a house, we want to make sure that you have, you know, whatever disability. We want to have it documented. A good lender is probably going to get with their underwriter, and they have resources that will allow them.
When they ask a question, reiterate that question.
Okay, yes, ma'am. Okay, did everybody get the last question? I'm sorry. She said, what steps for disability, correct? For disability income, as I mentioned, that you'll just want to make sure that your lender gets with the underwriter and make sure that the disability can be used as income. A lot of times you'll hear you had to be receiving it for a certain amount of time, and you'll also have to be able to document that you're going to receive it for 2 additional years. And that's normally the guidelines, but there could be some extenuating circumstances, and if that's the case, you know, your lender should be able to help you out with that. Any other questions in regards to income? So I think that's probably one of the most important. You know, and a lot of people are scared to ask their lender. They don't understand. Disability is a good question. Yes, ma'am.
How much do we have to have for closing?
Okay, she asked how much do we have to have for closing. That's going to be different depending on your loan size, and something we'll touch on a little later. Or there are programs in the state of Texas, Grand Prairie, other areas around the DFW that are going to allow you to qualify for grant programs, which will allow you and assist you with any closing cost needs you may have. So each loan is going to be different its own way, and most loans are based on, you know, your loan amount, how much you're financing, so your closing costs are going to be similar on, or I should say different on each one. Yes, ma'am. Okay, she asked if you have credit issues and you don't know how to solve them, who do you talk to? And I'm sure a lot of us have been in that position. I would start with your lender, because your lender is going to pull your credit, and then they're going to determine what your credit score needs to be. And depending on how hard or difficult or involved it is, you may have to seek out a credit repair company, or if you have a good lender that's worked in the business for a while, they may know how to get you to that level. You know, my goal when I close a loan is to try to make sure you have as much money in your pocket when we close. And sometimes you reach out to a credit repair company and the first thing they say is, I'm going to charge you X amount per month. And if we're trying to buy a house, the last thing I want to do is go get more debt. So I would start with your lender, and if this person knows a little bit about you know, working with your credit, we've seen a lot, most of us, that we kind of know how to get to that point. So that's a great question. Yes, ma'am.
He wants to ask, right now he has a voucher for a VA loan, but he doesn't know where to start with the VA loan. Does he go with the realtor first, or does he go to a lender first? Where does he start?
And he has what with a VA?
A voucher with a VA.
So basically you're eligible to qualify for a VA loan. Are there any other veterans in here? Okay. VA is a great program that will allow you to do 100% financing. In some cases, little or no money out of pocket. And that's great if you can get an aggressive seller that maybe can help you with closing costs. But for your point, I would always start with a lender. And the lender's going to let you know if you're pre-qualified. There may be some realtors out there that are willing to drive you around, but if they haven't asked you a question, and this is very important, if they haven't asked you if you're pre-qualified, you probably should look for a different realtor, because you know if they're willing to put you in their car and drive you around. I know they offer Uber service in Dallas, but you know, a realtor, a good one, is going to ask the right questions, because they're not in the business of wasting your time. And so I would always start with a lender and get pre-qualified. But that's a great question, whether it's VA or any other loan program that's out there. Let's talk about something that's really important and somewhat confusing when getting a home, right? It's closing costs, and that subject has come up quite a bit. How much do I need, right? What are closing costs? What consists of closing costs? So there are 3 types of closing costs. Can anybody talk about one of those closing costs? Does anybody know what the 3 types of closing costs are? The most important one is probably the down payment, right? So you always hear that. We just mentioned VA financing, veteran financing. That's 100% financing. Most programs that we look at today, especially if we're talking about grant programs, we're doing 3.5% for FHA. On a $150,000 house, 3.5% is roughly $5,250. So that's going to be your first closing cost. Your second closing cost is what we refer to as prepaids. Anybody know what prepaids are? Prepaids are essentially what we use to set up your escrow account. Does anybody know what an escrow account is and what it's used for? That's also a good way to put it. Yes, your escrow is used to set up your taxes and insurance, and so at the end of the year, when they're due, you're not having to come up with additional funds. It's a great way to, it's discipline in a way, especially as first-time home buyers. You don't really realize how much goes into the house, but having, an account set aside for your down payment, for your homeowner's insurance and your taxes is very smart, very smart. Lastly, you have, what did we talk about? Your actual closing cost, okay? So those closing costs consist of your lender fees and then your title fees. And normally this is your lowest portion, and typically on a $150,000 purchase price, you're looking on average of anywhere between $7,000 and $10,000 total. Any other questions in regards to closing costs and down payment? Now, yes, ma'am.
You just mentioned that $7,000 figure.
Yes, ma'am.
I'm sure most of us is thinking, wait a minute, I got $7,000.
Well, and that's a great segue on what I'm about to talk about is the city of Grand Prairie, as well as the DFW, we have several grant programs available. Grant program meaning free money. And you're saying free, there's nothing free. Well, really, there is free money that's available to you guys. I would talk to your lender about that. It's not a difficult process, but I can tell you that on several occasions in the DFW area with grants that are available, that I've moved families into houses for using a grant program, and the seller did not contribute anything, and they moved in under $1,500 out of pocket. So you say you said $7,000 is a lot of money, absolutely. But what if you could move into a house for $1,500? Right. And that's more feasible for most of us. I mean, the programs are set aside for people to be able to move into houses who may not be able to save month to month. Let's be honest, I mean, it's expensive to live in the DFW area. But if you can take advantage of some of these programs that allow you to qualify, they are income restricted. So we're not giving this free money away to someone that makes $100,000. It's going to the low to moderate income, and you don't have to make a little bit of money either. Most of them are anywhere from $50,000 to $80,000. So you're thinking to yourself, most of us probably fit in that category. And the state loves them. I mean, they originate these loans quite often. About 50% of my business comes from grant programs where I help families like yourself get into homes. So $7,000 bad, $1,500 good. Any other questions in regards to grants? Because I really think that's something that if you can take away from this class, that's really, I'm sorry, I didn't. Okay, she asked how many grant programs do we have? Okay, so I don't know the exact number because some cities and towns have specific to their area, but I do know there's a handful of them, and that's the unique thing is that we're going to take your situation, which is going to be different than your neighbor's situation, different from anyone else's situation, and we're going to try to tailor-make the grant program that makes the best sense for you. So that's a good question. Yes, ma'am.
Can you qualify for more than one grant program?
Well, there's a grant program, and then there's what they refer to as a MCC. It's a mortgage certificate. So yes, you can qualify for additional programs. The MCC is something that when you file your taxes, it gives you a credit on top of your additional housing credit. So yes, ma'am, but that's really the only add-on. Most of them are city-specific, grant-specific, but yes, you can. Yes, ma'am.
I was speaking with a young lady earlier, and the down, in talking about the down payment, when you're in the down payment, when you're in a homeowner program, a homebuyer assistance program, I found out. But what else I gotta have? I'm qualifying for the program, but what else I gotta have? I get the down payment assistance. What else do I have?
Okay. That's a good question. She says, what else do I have to have with the grant, right? What additional things do we have to have? Each grant's going to be a little different. Some grants require you to live in the property for a certain amount of time. Like the city of Grand Prairie has a great program that they can pay up to $20,000 towards your moving into the house. Other grants, there are no additional requirements, no additional inspections, no additional out-of-pocket money, no additional anything. So they're ideal for an individual that doesn't have a lot of money to put down. So there really are not a lot of strings attached. Unfortunately, the market is very bullish, and it pushes us around a little bit. But let's say you had a situation where you wanted to buy a house, and in the past, your friend, family moved into a house, and the seller contributed, and contribute up to 6%. If you're in a multiple offer situation today, so let's say there's 3 offers, and you have the grant, meaning you're going to get qualified, you have this additional money, and someone else does it, and they're asking for seller, to contribute towards their closing costs. That seller is probably going to lean towards your offer. So there are some advantages to having a grant program. So, that they lean towards your offer because their bottom line is a lot better, that puts you in the driver's seat. And grant program is really a nice way to go. Yes, ma'am. Hold on 1 second. She was answering here. I'm sorry. I'll come to you next. Yes, ma'am.
On average, what is the percentage of closing in comparison to the loan?
On average.
All the, you said it's down payment, it's prepay, it's all those other additional fees. On average, for example,
Okay.
is it 10% of the whole loan? Is it 10% of the whole loan?
And it's normally, and it depends. To give you an example, on a $150,000 loan, the closing costs are typically between $7,000 and $10,000. That includes your down payment of $5,250, and that's your majority of your closing costs. And then it also includes your prepays, and then your lender title fees. And those, I would say, would be split up between the two. Your prepaids are basically, we're taking your money and we're putting it in a bank account, right, and putting it there. So that's really your money, but it is considered closing costs, and you will have to have it to close. Does that answer your question?
Yes.
Okay. Yes, ma'am. Yes. 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 Okay, so she's asking, it's a great question. So the grant, does it pay for your down payment or does it pay for your closing costs? Is that your question? Okay, so the answer is it pays for both. So the $5,000, if you find a $100,000 house and it has a 3.5% down payment, you're going to pay $3,500, and then you'll have an additional $1,500 to pay towards your closing costs. There are other grants out there that pay up to 5% of your loan amount. So if you had a $150,000 house, they're going to pay you $7,500, and that's going to pay your down payment and closing costs. So just because, and then that's what we'll do. Your lender can look and determine which program's best, because you may not need 5%, you may only need 5,000, or vice versa, you may need more. So there's not just one grant, there's many grants, and we should look at all of them. Absolutely, and if they don't, you have my information. I'm more than happy to go over that with you and kind of go over what makes the most sense. Yes, ma'am. It's a great question. That's a great question. She said, what happens if the homeowner, the seller, is willing to pay closing costs? If they're willing to pay closing costs, I can get you into a house with zero money out of pocket.
But how realistic is that?
It happens all the time. If you have an aggressive seller, let's say the house has been on the market for 45 days, they need to move to Florida, right? Your offer comes up, and then the seller, they're willing to pay, customary, I would say until this crazy year, 3% was fairly customary for closing costs. The seller would pay 3%. Well, if I get 3% from the seller and I add that, bundle it, we could say, with this grant, in most cases, and I want to say always because always and never, right? But I can move you in with almost no money out of pocket. And I mentioned earlier I had a couple that moved into a house with $1,500 out of pocket. If that seller had contributed just $1,500, they would have moved in with no money. So there is opportunity out there. You just have to have an agent that understands the market, right, and can get you your best bottom line.
And this is just hypothetical. If a seller was to pay the closing costs, does that make you not qualify for any?
Absolutely not. Great question. So she asked, if the seller pays for your closing costs, does that disqualify you? Because in theory, you would have more money. Well, the answer is no. It does not disqualify you. The grant is completely separate from your contract. So that's a great question. Yes, ma'am.
I had a situation where I contacted a lender and pulled my credit, let me know what my credit score was, and came back and said, hey, there's some things on your credit report where you go back to like the different creditors or the different like TransUnion, Experian, whatever.
Right.
My underwriter said, get these things off. So I have a hard requirement the first time. They said, wait a few months. They pulled it again. Now I have two hard requirements and my credit score went down. It's like, what do I do after that? Now my credit score is down and how long do I have to wait?
It's a good question. She said, so she initially applied, and this could happen to any of us. She initially applied for a loan, and unfortunately, at the time, her credit wasn't where she needed to be. And the lender said, go do X, Y, and Z and come back. Well, then she came back and had her credit pulled again, and then her score went down instead of going up. Well, FICO tells us that you can have your credit pulled as many times as needed within a 45-day window, and that should only count as one inquiry. Now, and it should not. Now, will it drop? I'm not an expert on that, but I'm saying it may come down a little. But a good lender is probably not. Your credit report is good for 90 days. So was a second pull after the 90-day window? Okay.
Between 4 and 6 months, and then they'll pull it again to make sure that things are off of my credit report.
Right.
And they still hadn't come back and say, okay, let's try to work with you or anything. They just kind of left me out there.
You should probably find a new lender. And that probably happens to a lot of us, right? So you call in and they're a yes/no lender. There's a lot of those out there. There really are. Yes, you're qualified, or no, you're not. Find somebody that's willing to work with you because, as I mentioned before, as a lender, we financially undress you, right? We tell you you're good, you're bad, you need to do this. You need to find somebody that's going to work with you because I'll be honest with you, it's not an easy process, and sometimes this is going to take 3, 6, 9 months. So find somebody that'll work with you, and I would suggest not having them pull so often. You have free services out there that'll give you an idea of where your score is. You guys familiar with some of those? You see every commercial out there. You can pick your own. But before I would have my credit pulled again, I would make sure those are removed, those inaccuracies that you're trying to remove. That's a good question. Yes, ma'am. Okay. We would all love to have that problem, right? Did everybody hear? Everybody hear what she said? On the brochure it says, your do's and don'ts, and we'll kind of talk about it because it's very important, right? Why does your loan fall out of processing? But don't make any large deposits. And the reason we say don't make, and we're referring to during your loan process. So if you're approved, don't make any large deposits. The reason is we have to source those deposits, and they can bog down the underwriting process. And if you do receive a gift, we have to source it, meaning I have to find out what account it was, drawn from to go into your account. So that's what that means. Yes.
I'm like a lot of people, I was delusional because all my friends was telling me you can get down payment assistance and closing costs from the seller. And I am in the market to buy a house in the next 30 to 40 days.
Okay.
My realtor, who I beat down real good, she has educated me on the sellers paying doing billing. They're
Right.
not even paying for surveys. They're not doing any assistance. So it has changed what I'm doing, and I'm pretty aggressive.
Right.
What I want, and I'm not afraid to put an offer on a house and ask the seller for something. My realtor keeps shutting me down, saying, if you do that, you're not gonna get it, man. I've been in an apartment for 40 years, really. It's gonna make a difference.
Right.
But what I'm finding out is they're not giving up a nickel. They don't even want to do the survey.
Right. Well, what she's asking is we kind of touched on this before. So sellers are not paying for any closing costs. It's customary, just so everybody knows, that the seller pays your title policy and they pay your survey. She said, well, they're not paying anything. It's not that they're not paying anything. It's that there are other agents out there that are negotiating, saying, we will pay for those fees that you normally pay for. So what's happening is you're getting outbid by someone else that wants the house or is willing to put more down. The grant programs out there can help you be more competitive in those situations, okay? So if you get up to 5% of your purchase price, you can go in and pay for these things, and that happens quite often. As I mentioned before, the market is a bully, right? It makes you do things that you may not do in different times. But, the grant would definitely help you out with that. Yes? I'm sorry? Uh-huh.
So how does it differ from a traditional lending process?
And I guess I'm confused on, you say rent-to-own programs. I'm not familiar with any rent-to.
You're renting the home and maybe 6 months in, you're like, well, we can go ahead and get you prepped to own the home. So they start the home buying process.
Right.
It differs from traditional.
Yes. Okay. So she's asking the difference between rent-to-own and traditional home buying. Am I right? Okay. So normally your rent-to-own programs are private financing through somebody that purchased the house, and then they put you in the home, and you say, well, I want to buy it. So some programs will actually use a certain amount of your down payment towards, and every month that you make a payment, they'll put that towards your down payment. Completely different than actually buying the house. When you're buying the house, you're getting a loan from a lender, and that lender is essentially qualifying you. So the rent-to-own is very popular if you do have some sort of issues, but not something that's normally with financing. So yes, and she's right. Some of them are scams. Yes, ma'am.
Yes, what range of, should your credit be? Or what range to qualify you?
Okay, that's a great question. So she said, what range should your credit be? The answer is it's different for each program. That's why you have to sit down with the lender. So most of them start at 620, and then they go up from there. Yes? Okay, I believe he asked, what qualifications do you need to qualify for the grant? Okay, the great news about the grant is that if you qualify for a loan, you get the grant. There's no additional qualifications, so you don't have to go out and do anything on top of it. There's no additional inspections, okay? As long as you qualify for the loan, then there are grant programs out there that we can help you with. Let me come to her. Excuse me? Even if you're not a first-time home buyer. There's some specific that say you have to be a first-time home buyer. There's others that say you don't. And the definition of first-time home buyer, just so everyone knows, is you have not owned a home in the last 3 years. So you could have owned a house 10 years ago, and you're buying a house today. You're a first-time home buyer. Does everybody understand that? Okay. Yes, ma'am.
So ideally, what debt to income ratio are you looking at?
Good question.
Deciding to approve a loan, and like for it to just be consumer debt as opposed to?
Good question. So she asked what debt to income, and everybody's familiar with debt to income, how much you make versus how much you have on your credit report or how much you owe. Most grant programs, we're going to take the same debt to income as if you were buying a house without a grant program. So if you qualify for a normal home, and normally it's under 50%, so that's easy to calculate, right? So you take your debt to income. If it's under 50%, then you can qualify in most cases for a regular loan, and you can also qualify for a grant. So just so everyone knows, the grant is just an add-on to a regular program. Yes?
How long is the pre-qualification for?
Good question. How long is a pre-qualification good for? It's good for 90 days. So as long as I don't have to pull your credit again, as long as I don't have to pull your credit again, or your lender doesn't have to pull it, your pre-qualification is good for 90 days. Yes? Okay. She said, and this is also a good question, what do we look for on a credit report? So essentially what I'm looking at is your credit score is a great indicator to tell me how you repay your other debt. But we're also looking to see if there are any, it's good to have your credit report pulled so that you know if there are any inaccuracies. So when I'm going over your credit with you, I'm going over line by line. And the reason I am is because, let's say you have the same name as someone else. There's a possibility that somebody else's debt is going to show up on your credit report. Let's say you're a junior or senior or a third. That could also come up. And I would just want to make sure that everything's been paid on time. I also want to make sure that there are no collections, anything other than medical collections. So the government's very nice. If you have medical collections, we basically look the other way. They will affect your overall credit score, but we're not going to make you pay those off. Now, your small collection accounts, whether they be DirecTV, some of the energy companies, as long as they're not large, and I don't want to go into detail, but as long as they're not above 500, we should be okay. So you can have some small ones, but we overall we just look to see what your ability to repay would be.
What about student loans?
Student loans, great question. So, yeah, student loans, great question. It all is determined on that individual, and the reason I say that is that if you're in school, there's some guidelines that allow us to basically look the other way on those debts. Now they are changing some of that moving forward, but today, in today's day, I can, if they're in forbearance, then we don't look at them. Go ahead.
On that student loans, they also have a program where they have where it's zero minimum balance, so it won't affect your credit score. Like you'll still have a payment option for it and payment plan, but they have a program where you can apply and they'll set you at zero minimum payments a month. But you can pay $19 or $25 a month if you desire, but your minimum is zero.
Correct.
It doesn't go against you for your credit. It actually makes you look a little bit cleaner.
Yeah, because you're making payments when you don't have to. Yes. Okay, that's a great question. Okay, so, and this is kind of the myths about grants, right? She asked, if you apply for a grant, do you have to use it right away? Well, most grants out there are self-funding, and what that means to you is that as someone else closes their loan, that money will go back into the pot to pay for the next person. So the grant is actually, once the way you apply for a grant is once your loan is approved, you make a reservation for the money, and that money is there for you. Now, I don't want to confuse that with, there are some, like Grand Prairie has a neighborhood stabilization program. There's only a certain amount of money in there. So that is a first come, first serve. So there are some out there, but most of your grants that are funded by the state will actually, there's unlimited funds in there. So it's for everyone. I'm sorry. So, okay, so the lender is going to be the only person or institution that can help you with the grant, because a grant is essentially an add-on to a traditional loan. Yes, in the back. Okay, great question. She said, does the grant cover outside of Dallas, this DFW? Absolutely. Yeah, the state of Texas has a grant that's available through the state of Texas. So that's a great question. Yes, ma'am. Okay. So she asked, what age do the lenders stop loaning money? We're not ever going to stop loaning money. So there's not a certain age, you know, and I hope that there's not a lender that'll ever tell you that. But we don't look at age. You know, we look at your ability to repay. And you could be, and let me back that up, you at least have to be 18 years old. So, but you can. I've helped people out that are in their 80s, so it just depends on your ability to repay. You know, everyone has their needs. Yes, ma'am.
So who pays the earnest money?
Good question. And you're probably referring to if a grant. So if you have little or no money, who helps you with the earnest money? Does everyone understand what earnest money is? Earnest money deposit. Okay, so when you go into a contract, your realtor's going to ask you for your earnest money, and well, what's that? You said this is no money, right? The earnest money essentially is you're giving it to the title company when you go under contract, and there's a lot of reasons why you go through a contract, and there's what they refer to as contingencies. But the reason that money is there is because that seller has decided to tie up their house with you, and because of that, there is a deposit. We will refer to it as they're going to take a deposit, and that deposit is normally paid for by you. So, and that can be negotiated in so many different ways. If your agent says, you know, they want to give a $500 earnest money deposit, the seller may say, well, I want more, or vice versa. So that number is determined by the seller, so the seller's agent. Yes, ma'am. Okay, so the question is it better to consolidate your debt versus paying it out on your own? And that's not a question, I think, for me as a lender, because I don't want to. There's not a right or wrong answer to that. In my personal opinion, I say consolidation is probably not the way to go, because as a lender, they're looking at your revolving, your installment, your debt versus how much what your credit limit is versus how much is on that credit card or on that installment, and the bigger difference between those two, the better your credit is. So if you consolidate all that into one, then you basically have hardly any available credit. So in some cases, you've made it worse. But that's always going to be different for everyone. Yes?
Those spouses have to have good credit or equal credit?
Good question. So the question is, do both spouses have to have good credit? The answer is, it depends. Because there's programs out there. The state of Texas is a community property state, and what that means is, of course, what's his is yours, what's yours is hers. And there are conventional programs that only require one person, but in most cases, the grant programs, we're going to look at both spouses. So did that answer your question? Okay. Yes, ma'am. I'm sorry, I can't hear you. Repairs? The question is, will the grant money help with repairs? And the answer is no. Okay, so the house has to meet a certain standard through the appraiser, and no, they're not. But Grand Prairie does have a neighborhood stabilization program that will help with some of those repairs in certain areas. So, you know, you can move into a house, there's so much money, and then once you move in, they'll allow you to use sometimes up to $10,000 additional dollars to do repairs. So, what's that? No, the appliances will not be covered by the grant. But she said I have 5 more minutes, so I do want to cover something that's very important. And once you do get in the loan process, very frustrating for not only you, but for the whole process when there's certain things, the don'ts, right? So on here, the do's and the don'ts. And I just want to kind of go over all those. And if you have any questions about those, I want to address them, because if your lender's not very transparent with you and tell you don't do this, they assume you know, you may not. And it's very important. It could ultimately end up canceling your loan. So don't change employment. So don't change employers. And the reason I'm laughing is because you'd be surprised. You'd be surprised. I got a better job. Unfortunately, Not to say we can't close on your loan, but we're going to have to wait until you get your first pay stub. So please don't change jobs during the loan process, because we used your current job when qualifying you. Also says, or marital status. So, I mean, it's not that that's a bad one. If you go out and get married, it is going to change the dynamics of your loan, because, as I mentioned before, community property state, you're going to have to pull both people's credit. And if I qualified you on just yours and you get married, now I have to bring your spouse in. Yes, ma'am.
I have a question regarding employment. What if there's no gaps? Like if there's consecutive employment and you get a career growth within, maybe not the loan process, but maybe recently when you apply?
Well, and that's a great question. What about gaps in employment? What if you had a, you had a career change where it was a better? There's no gaps. Then that's okay. You know, you're okay to get a better job, and that's what we all want, right? Yes, ma'am.
Some programs require that you take a homeownership or home buying class.
Yes. And that's something that she asked. Some programs require you to take a home buyer's class. I'm going to say all grant programs require you to take a home buyer's class. So that's normally about 5 to 8 hours, and it's not fun. So if you have to do it, get on it right away. Just one, I believe it's one time. Most of the time when I get somebody that's looking to buy a house and we're moving towards the grant, I'm going to have them do that right away. I don't know the answer to that. I can find out for you. And that's a good question. If you did it 3 years ago, would it still last? I don't know the answer to that. Okay. Okay. Perfect. It expires once a year. Yes, ma'am. Yes. Uh-huh.
And it was a Homebuyer Solutions program. Is that the same type of program that you guys have?
I don't know if it is. I'm not familiar with the class.
Okay, so what it was is when I was not married yet,
Uh-huh.
and I went through one-on-one with a specialist.
Mm-hmm.
We pulled the credit report. We walked through each step of the credit report. They put it in a computer. The program spit out what I needed to work on.
Mm-hmm.
I had that report back. Every week, every Friday, I would check in with this person and, have you worked on it? What else, needs to be worked on? What was the response after you talked to the credit report? And then next Friday, I would have a to-do list of what I needed to do. And then next Friday, we repeat, and we're like, okay, we discussed this. This is the letter I sent out to the credit report. This is what they said. And then there was next steps. It was really tailored to increasing my credit
Mm-hmm.
score, my FICO score, so that I could get qualified. Because I had a lot of good things in my background, but there was two snags. And it was like, open up a credit card, charge $10, not more than $10, so that it shows that you have a history of paying on time.
Yes, ma'am.
Increases or extensions. So then at the end of 2 months, your credit score will go up by those 5 points that you need.
Mm-hmm.
So it was like really helpful to have that one-on-one relationship. Is that what you guys offer?
I think what she's asking, or what she's commenting, is that she went through a program that gave her step-by-step on how to improve her credit. Now, that's more or less a credit repair person. So that's not something the lender's going to do that involved. Not that someone's not going to know how to get your credit score up, but that's not the same program. And we got to go quick, so I just want to touch on these because they're very important. Change bank accounts. Don't move your money from one to the other. It just adds more steps. Make large deposits unless you're that lucky. I mean, like she said before, I'd love to do that. But the reason being is that the underwriter will have to source, and they refer to it as mattress money. Some people just don't believe in banks. Well, if that's the case, make sure you tell your lender that right away. And then if it's in the bank, it needs to be there for at least 60 days. Close any credit accounts. So I don't use this card, I just closed it. It can affect your credit, so please don't do that. Max are overcharging. So when you're buying a house, you're like, well, we need curtains, furniture, we're going to Nebraska, we're going to get everything. Please don't. Wait till you buy the house, because if you do, it could potentially hurt you. Take out a new loan, same thing. Open a new cell phone. Well, I need the cell phone. These little things can definitely affect your ability. Just so you know, we pull your credit at the beginning of the process. We're going to pull your credit at the end of the process to make sure none of this took place. Pay off any loans, collections, unless you have instructions by your loan officer to do. Please don't do that. Take out new student loans, also a new loan. Please don't do that. Or take a cash advance. These cash advance companies, they're predators, man. They'll come after you, and they'll also hurt your credit score. So please don't do that as well.